and investors. A quick look at the S&P 500 futures. It's a big down day today. First day back for the market after President's Day. Remember, not financial advice, just observations of what is going on. So be aware of that. So these two guys on screen probably know as much as anyone as what's going on. A very volatile market, but also very much like clockwork. If you stand back a little bit, you can see what's going on. Okay, so today we're broken some pretty significant levels, but we're also held. Remember, this is trading like clockwork, and those not familiar, that we put these out every week in Market Weekly, all the different markets, a daily and weekly look at it. So that is always out there for you to look at. So very clinical. The move up here, those that follow our Nova Wave, we spat 4,200, and we're now almost down 200 handles. We're actually down over 200 handles, top to bottom. The acceleration came here with this little 1-2. We're looking at a daily here, just so because we wanted to show significantly. It broke the Cajun today and accelerated for about 40 handles there. So remember, as we've said many times, the algorithm, this market's pretty well algo based. It's become algo based. They're either going to be mass equations or off news releases, and the third one would be major levels. And people sort of talk about order flow. A lot of that is just stop losses. So of course, it's order flow and stuff like that. So you want to. The whole point of Nova Wave is to be kind of ahead of the curve of what's going on. You can stand back and you look at these fear of influences of what's going on. We're watching this develop here. Really, it needs to get back above the Cajun if it's going to bounce. You can see the cloud all the way down here on the daily. Now, if we look a little bit deeper on the weekly, a little bit wider, this is where it becomes more clear. So on the daily, we just saw the round number 4,200. Remember, that was also massive option level. That's very important. I'm sure everyone's familiar with the stories out there, just how big options have become, right, out there, like particularly same day options. If you're from oil and gas, you're very familiar with them. But now on the weekly basis, they're becoming very, very popular in equities, be it single stocks or the S&P, obviously. So when we look at the weekly, you can see 3 red bars, i.e. 3 down weeks, real simple. Nearly got to the top of the cloud, didn't, but we were in the cloud. And look what we're coming down to test, right? So we're testing, let me get my little crosshair here. Where is it? I can never find any of this stuff. But you can see here, give me 1 second, my friends. That's my American accent. So if we look here, we can see this tank in this orange line. And so we're coming down to test that. It's going to be support and this breakup level, this channel, right? So basically if we're going up, this needs to be 1-2. This needs to be 1-2 of a third wave or a higher C, right? So we want it to hold here. It can still go down to the Cajun, this pink line, and still be bullish. If it holds a lack of bounce, it is possible to still do that. Now you can see this circle of influence here versus here, very similar action. And so this 38% was the top of this breakup. So you can see the confluence. Now what you see on stocks more than commodities is it entraps everyone because there's so many more, more punters and dribblers in there, right? Or a mixture of traders that are averaging, and then it goes against them, so you get these big spits, more than on commodities even. You can see these moves. So I want you to notice that level, right? And then if we come back to the daily we just looked at, you can see there's a lot of room to that, right? So that there on here is going to be all this confluence. And guess what? That's that chart. That's that cloud, right? So this is a big level on 2 time frames. Now, if we widen this out a little, and we're just looking on the SPUs, but we will look at the others in a little bit. And individual stocks you want to look at also. So go through some of these charts. But the main thing I want you to look at as we go further on stocks is this little beauty. This is what's running it all, right? Remember, bonds, Forex, couple of the major commodities like oil and copper, but then bonds run a lot. See this here. This is bonds, 10-year bond future, hitting new lows for the day. 2.8 from almost 4.8. So this should not have been unexpected. The market wanted to take on the Fed. They always want to look, I see these dribblers and they have hundreds of thousands of followers on things like FinTwit, never been in a bond pit in their life, telling you what's going on. Be very, very careful. And so they keep trying to reinventing what Powell, for example, is saying. He's always been very clear. It's about a question of degree, and their intent is inflation, right? But one little word and out of place, so he brings out his minions. We saw Mester last week. So the market tends to get all one way because they're following each other rather than understanding what's going on. Does that make sense? So we can see that. That is the live of the price. If this is easier, this is the yield. Look what we've done since the last FOMC. We're almost at 4% again, right? 395 plus 1/8. And it's come all the way. That's an older FOMC we've left on here. I should mark that one in. Been a while. So this is running the whole show. These guys, right? And look how earlier it is, right, than everything else. You want to look at Forex, right? Remember I mentioned. Here's the Aussie, but let's look at dollar yen real quickly on the weekly. Look what's happening on dollar yen. It's pressuring these levels. And the reason I'm showing you the weekly chart is the overall view. So we had all this action down at 50 moving average. You should have been aware of that. This happens, the bonds happen, stocks are last to go, right? And there's always a little bit of pain here because you're reading all these people and stay off them. They're always bullish or always bearish. So all the bears will come out in the stocks. Let's go back to stocks. Here, right, all the bulls come out here. Basically what's going on, right? So let's look at this on a shorter time frame so you can see what's going on. So this is 10 minutes. So this is from last week till today. And you can see it's just relentless selling. But look at these. We had one dribbler we let in the room once that would laugh at things like kiss of death, kiss of life. But they're real because those indicators somewhat up what's going on. So we had this all start here, right? 40.72. Obviously, Johnny Hindsight shorted way up here. But this acceleration came here, see the kiss of death, and then it reconfirmed, and it did another one just after it got to these this cloud here, and then rocketed down. And see what's going on? So now, remember, this is the SPX. So you want to look at the cash price, because there's so... And so I've seen dribblers go on about, the spider's so small. This has the massive size that goes on the basket of this is huge, right? So you've got the spider, SPX, same thing basically. Just different variables. Obviously ETF has a variation, so just have a quick look at that. And then of course you got the S&P, the granddaddy of it all. So this is really relevant because it smooths it all out. And so there will be a plus or minus on the SPX, plus you have the interest rate influence. But look what's going on, right? And look at the false break. So that's 10 minutes. So now we're going to go back out again and show you. So in an hourly, even more. Look at these big spikes, right? So that is the... Obviously, when there's a buyer options, there's a lot of sellers. The market maker protecting it or just selling. Don't forget, a lot of people buy the option. This is what a lot of people don't understand. They buy it to protect their short, right? So they're long. Then they want to get out of it so they can actually become delta flat, delta neutral, however they want to be. and then they may be extrapolating against true positions. So look at what goes on. And we know there's some people just trade vol. I think it's JP Morgan has a massive fund just for that. Anyway, you can see this. So look on the hourly, look where it's come down to. This is where we were at the end of the month, right? So we're basically giving back everything it did in February, which was 200 handles, back to here. Now, okay, so that's a quick look at that. Now let's have a quick overview of what's actually going on fundamentally. So we had a slew of PMIs out today. So today, that's causing the Treasury yields to go up. They started going up when they started coming out in Europe. There were some decent ones there on the services side. We've got increased tension, right, between the US and China, and also obviously US and Russia, or Russia and the world, basically, other than China. Well, who else is in that group? Iran or someone, right? So to think about that. So the dollar is getting a lift from higher interest rates, but also, so that'll play out if bonds become, so what you're seeing is the threat of higher rates outweighing the safe haven for bonds. And then today, of course, we had two big stalwarts of the economy in the Dow, Walmart and Home Depot, both give warnings. Home Depot said that, I think they didn't even give comps, which is unusual for them in their guidance, but they did say that they're very worried about the US consumer and the global consumer. So the US consumer is doing better than most. So it gives you an idea what's going on. And Home Depot has noticed that the higher interest rates, coupled with shortages, most of these shortages have come in, but there is still some, are causing sales to drop off. So they're actually down. So that means your home repair business has come, home, which we've all been doing since COVID, give you something to do. That and own a pet, right? Half of it seems. So you're getting that. And the mega caps, which took this thing up, but started coming off a few days ago, are also selling off, right? The energy complex, as we talked about on the natural gas and oil ones, were both down. But again, this is all yields. And just imagine where oil would be if you didn't have geopolitical tension today, right? Maybe think about it like that. But there was a couple of stocks individually that are down pretty hard on earnings. Other than those, we also saw gold come off almost $8 to close down on the day, and this is its lowest in 2 months. So its year-to-date gains are only 0.89%, so not even 1%. So all this gives you an idea what's going on. But what's interesting, what are they buying? Doesn't seem like a lot, does it? They're selling bonds, selling stocks, selling gold, selling all oil, etc. So it gives you an idea that everyone was probably one way, right? Because usually there's an extrapolation. What is changing is on the curve. So look at the curve, and that'll give you a better idea of what's going on. Now, all this affects the SPOOs. SPOOs directly look at these big levels. As we've just pointed out, we are looking really short term here. This is 60 minutes. I went through the dailies and weekly with you, and look again. Here's minus 2.8. So we know all this is a big level, 39, 40, 50. 4,000 is a big psychological level, give or take, okay? So that's what's going on there. Hopefully that was helpful to you. I will put this back on the daily for you as we leave, so you can see what's going on. So you can see this penetration here, right? So there's a lot of levels. You want to see what actions here. This is what you need to hold constantly, that 20 to 50 depending on what time frame. Right, that's cash. Look at your spread as far as your futures go, right? Now, bonds, as I mentioned, running it all. So the other one is the 5-year note on that I want you to look at. That's mean. So that hit a fresh low this afternoon. And the 10s also hit fresh lows, which I just showed you on the futures. Right, and we did have an auction today. It was a 2-year, and that had mediocre demand. If you remember, two of the last 5, which was the 10 and the 3, were really bad bond things. We've seen today the only strength was on the 30-year. So we're going to talk to you in yields. that was up 0.9 basis points, whereas the front was up 12, as was the 3. But look at the 5 was up the most, 14. I'm talking yield, so that means the weakest bond was the 5-year, right? And the 2-year was up to 4.73. So that's 2 years what you look at for the Federal Reserve. So the 30-year was only up 9 and still under 4. So that gives you an idea there's a little bit of safe haven going on there. So anyway, I hope you enjoyed that. It gives you a bit of an outline of what's going on out there, some key levels, the machines you'll be watching. Keep it open-minded. Don't get caught too much. Look at the OIs because options are such a big level. If you like what we're doing here, and we'll do some more of them, hit the like, hit the subscribe, and I will see you later. Trade smart.